All right, it is Thursday night at 7 p.m. We have a good one for you tonight. Ian Ashton, our preferred mortgage lender, is going to come on here and do sort of a mid-year recap, half-year prediction, tell us what he thinks is going to happen, what has happened. I did a video about a week ago, a mid-year update as to, sort of a halftime report of what has happened this year. And Ian is somebody that I value his opinion, which is why I give him the stage in front of my valuable audience. Ian's as good as it gets when it comes to mortgages. He is as dialed in as anybody. He understands, not only does he understand mortgage and the products, he understands why things are the way they are, which is why I lean on him often for mortgage advice. Not only that, he's been a good friend for a long time, not just business, but professionally. And again, somebody I really value. So I'm going to bring Ian on here in a minute. Got a couple questions for him, talk about some things that we've seen. Oh, where'd he go? Looks like he disappeared. That's interesting. I wonder where he went. Oh, he's just texted me his email. His internet just died. While we wait for Ian, I'm going to talk about a couple things that's going on in the market right now that I'm seeing. Actually, again, one thing that I like about doing these lives is I can tell you what is going on in the market in real time. And this just happened to me today. A couple of things happened to me today that I think are worth reporting, and I've got some big takeaways from them. And I think Ian knows the story because I talked to him. Butterboy Does Stuff says, hi, Butterboy Does Stuff. Thank you so much for watching. I'm going to bring Ian on now because he's back and I want to tell the story. Ian, welcome. First of all, thank you for joining us. I'm sorry your Wi-Fi does not reach your backyard.
Dude, that's literally, I've sat here all day working. Well, not all day, but I've sat here.
That's how it goes though, isn't it?
Yeah, 4 hours. It was 6:59 and it's like nothing. It says, check your connection. I'm like, what?
So I started to, sorry, somebody's spamming the chat that they want us to sub, that our subscribers to sub to them. I think we've got a bot in here. So anyways, no, it's not a bot. I started to tell a story because one of the reasons I like doing these lives is I can tell a couple of things. One, when I do these lives, this is the most active time of year for the market. So I'm able to tell something that's going on. And you already know this story because we talk so often, but we had this listing. I don't want to get too specific because this is like an ongoing deal and I don't want to, whatever. So anyways, we got this listing, very, very nice new house, over $1 million. We got a bunch of showings. We got 3 offers the first day or two, and all 3 were contingent on the sale of that person's house. And none of the 3 houses were currently listed already. And I thought, man, we used to get, multiple offers. One would be, maybe one would be contingent on the sale of somebody's house. So to have all 3 in the same boat, I thought, man, this is super interesting. If you're joining with us late, we have Ian Ashton on. He's our preferred mortgage lender, one of the best mortgage minds in the business. So make sure you stick around when we talk about this, this story. So anyways, all 3 offers come in, home sale contingent. And I thought this isn't a coincidence. I feel like when you see, I often tell my clients, if you price your house at a certain price, you get 3, you get 1 offer and that offer is low, fine. If you get 3 offers and they're all low, that is the market telling you something. And I think this story with the 3 offers, all contingent upon the sale of their house, was telling me something. And I thought about it while I was driving home. And the response I came to myself, and I think this is the truth, is this is an indication of how much pent-up demand there is, because these 3 people are all buyers and at the same time all sellers, but they don't want to put their house on the market. And my guess is because they're, with this inventory as low as it is, people,
there's a lot of apprehension, right?
There's they don't think that they're afraid to put their house on the market. And look, I've got a listing right now, somebody you and I both know who is in the same boat, and it just seems like the more I think about it, the more I'm like, yeah, I've got a lot of people out there. So what I'm getting at is I think this has been a tough first half of the year. And if anything else, I think the same way we didn't realize when the market was good how hard it was going to stop, I also don't think how we can quantify how much is going to rebound when things get better, because there is a ton of pent-up demand out there now. I'm both on the, every buyer, or not every buyer, a lot of buyers become sellers and a lot of sellers become buyers. So it feels like there's just a level of gridlock right now. So talk a little bit about that. What are you seeing on your end?
I'll tell you a story similar to that is I've got a buyer right now actively in the market, like making offers, making good offers.
Yeah.
They've been living in a camper, I think, for going on 14 months.
That's crazy.
Because they sold and they're like, oh, we're going to sell our house now because we can't imagine getting more for it, a year and a half ago almost. And here they are, and they're like, that'll give us so much more money to buy our next house. It'll be a cakewalk. And what they've seen over the last 14 months is that's really not been the case. It's been hard to find what they want. In fact, I have 2 buyers right now that are living in campers with similar situations where they've sold, and then it's just been a little bit more of a struggle than they thought to get the next house. So
right.
I guess on that side of the coin, they are probably a lot better positioned now than the people that are still waiting to sell their house. But that gives a lot of credence to your theory of people being apprehensive about going under contract without having, or not going contingent. Like it's it's a pretty wild shift that we've seen in the last 6 months, 8 months.
What happens next? Let's give a rundown. What has the first half of the year been like? We talked about it a week or so ago. I went on the channel about from my perspective, but as somebody who's, on the mortgage side, what have you seen in the first half of the year?
So from since the thumbnail reference rates, I'll talk about that for a second, right? Okay. So rates have been kind of all over the map, but really like it's been a pretty stable when you take out the highs and the lows, right? We started the year really high, like 7 1/8 or something like that. And we had a really short period of like 6.5, 6 1/4. When you take out those basically like 2-week stretches, the market's been in the same spot all year, like 6 3/4, 6.8%. So from that perspective, in the volatility, I think hurts buyer morale and hurts the market a lot more than anything else. So when we saw the dip down to, low 6s or mid to low 6s, it was like, everybody's like, yeah, all right, I'm not quite ready yet, but this is the sign I need because rates are going to keep going lower. And all those people that said that missed the boat and then got frustrated. And then it's like they reeled back. So we actually, my opinion was spring was a little bit slower than what we're used to over the last 10 years, right?
Yeah.
Transaction count is down, but volume is up.
Right.
So the houses that are selling for a lot, but there's a lot fewer people in the market. And I think that I think spring was challenging, but I think that, to your point, I think it created a lot of demand. It feels like once that floodgate opens, once the dam breaks, there's going to be a lot of activity. It's just, when does that happen?
What causes the dam to break? Is it, and before you answer that, I want to say, I feel like right now, I always want to be as positive as possible, of course, but it feels like one of two things is either going to happen. The dam is going to break because, something has happened in the world that has given buyers confidence, or interest rates have been lowered or whatever, or it breaks because we just go into a free fall, which I don't know. Can we go into a free fall? Is that possible?
Interest rates or values?
Values, not interest rates.
Yeah. So I think that, anything can happen, right? And forecasts are as good as the paper they're printed on. I don't see it. We're already starting nationally. We're seeing values kind of retract a little bit. And by retract, I mean not increasing as much year over year. In fact, I write content for our company twice a day. So I highlighted this the other day, and it was that home prices are going up slower than they have over the last couple of years. Right. So it's, a 0.75% increase month over month instead of 2% or something like that. Those are made up numbers, just, using for example. What you read online or what you read in the headlines is home values are declining. And those are two totally different things, right? Going up slower is not the same as going down. And I think we all could agree home values could certainly stay completely stagnant for a long time. And that would be okay. The rapid appreciation we saw over the last several years is
crazy.
Great for owners, but man, it's put buyers in a tough position, especially when you combine that with higher rates. So
it's tough.
I don't think we see values get smoked. I just don't know that we see them continue to rise the way that they have.
No, I don't think they're going to rise, because I think a lot of that was, a couple of things. I think that was, for whatever reason, COVID. I've got a couple sort of anecdotal stories about this. I remember during COVID where people would come up to their cottage, and this is the very beginning of COVID, where people would come up to their cottage and say, hey, we're in Metro Detroit or Chicago, we're locked down, we can't do anything, and I'm up here paddleboarding and whatever. Yeah. And then they tell their friends downstate, and so there was like a gold rush on homes in northern Michigan. And I say this often, and I don't know if you've ever heard me say this, maybe you have. I think one of the subtle indications or the subtle changes to Northern Michigan is the expansion of like the Traverse City Airport. I feel like that has made Northern Michigan more accessible from further away places
For
because
sure.
I'm seeing a lot of people buying here from, places that you have to fly from, right? Not Indiana,
Well,
Ohio, whatever.
it's interesting you bring that up because was it maybe 2 years ago that they started direct flights from, might have been Dallas or something like that, some major city in Texas, and it's like we've seen a direct
Yeah.
correlation, and it's not a tidal wave, but it's like you go from having like
Something.
1 or 2 deals a year from people in this certain region to having like 6 or 8 or 12. Like that's certainly
Right.
a trend. So I think there's something to that for sure.
Yeah, I think there's just a lot more demand when we're pulling from a much bigger pool now. And we've seen this over the last however many, since COVID. It seems like the wealthier people have chosen this area because suddenly I think Northern Michigan is expensive if you compare it to what it was 5 years ago. I think Northern Michigan is very affordable if you compare it to some of the other coastal areas around the country. And I think that's a little bit of what we're seeing too. I think yeah, go ahead.
As I say, we've got a buyer right now that's moving from the West Coast, and it was like I was chatting with him about property values and that kind of stuff, and the moral of the story there was he's like, yeah, houses are prices are high, like exactly what you said, relative to what they were, they're higher, but compared to what I'm used to, it's
Right,
like
they're still affordable.
it's like a steal, right? So I think it's
Right.
all about perspective, and yeah, I agree.
We don't really talk about this. We talk about this a little. You and I talk about this a little bit, but not a lot. This morning, I've watched CNBC in the morning every morning for probably my entire adult life. And today they're talking about, I don't know if Trump said this or somebody else said this, that they feel like the mortgage rates are creating like a national crisis. Like, what do you think about that?
So that was in
like
reference.
they basically said like in fewer words, and I don't know if I'm paraphrasing. I don't know if I'm saying this right. The essence of it, that basically the housing market right now in this country is like a natural disaster. Right? Yeah.
I don't know that I agree with that. Right. So like the second part of that argument is housing supply is restricted because rates are really high. Right. People don't want to sell because rates are so high that they can't buy and finance at a comparable cost. So the analogy I always use is like if you have whatever, you owe $200,000 on your house at 3%, and you're going to go buy it, and you make 500,000. So you got 500 grand, and you're going to buy $1 million house. You're going to finance 500,000, but that 500,000 you're financing is at 6%. That's a massive payment shock, right? That's a massive amount of increase, and nobody wants to do that. Whereas if you were financing 500,000 at 5% or 4%, each percent is like adds exponential increase to the payment. So I think that's part of what they're saying, but really, the quote there, I don't agree with it entirely. I think that housing affordability is a very tough subject right now. I think houses are expensive, and interest rates are a part of that, but the purchase price is also a massive part of it, right? So even if rates went down to 2% or 3%, which I don't, that's not a healthy spot for interest rates to be. I don't think that's many people are calling for that, but nobody thinks that that's where they should be. Right. Even if they go down to, a healthy level, whatever that is, 5.5 or something like that, that doesn't solve the affordability crisis. It's just part of that pie or part of that equation. So saying it's at a crisis level, I think is for clicks or for attention. When we look at national stats, listing counts in most markets are back above pre-pandemic levels.
Right.
So I guess there's a lot of sides to that coin. Like yesterday, Jerome Powell had said that the Fed doesn't directly impact the housing market, and that's what the quote that you're referencing was speaking to, where they're saying, yes, the Fed does influence the housing market because, and the reason for that is, the because behind that is, builders are less confident when money borrowing is more expensive. And while mortgage rates aren't set by the Fed, the short-term rates that builders use on their construction draws are, right. So if you're borrowing money on a construction on your builder spec line and it's 8.5%, you're going to be building a lot less houses than if it's at 5.5% or 4.5%. So there's a lot of back and forth and political nonsense in between there. And I don't know that I agree with either side. I think the answer's somewhere in the middle.
If you were Jerome Powell for a day, what would you do? what he's doing, not what he's doing. What I mean, that's a big question, but
I mean, dude's worth
how would
$200 million. I would retire. I wouldn't be the chairman of the Federal Reserve. That's
okay,
for certain.
okay.
No, I'll tell you, this is my view on it. I think he's doing the right thing right now for the wrong reason. So I think when he cut rates, not a political statement, when he cut rates in immediately before the election, that was many hypothesized and theorized that was a political move.
Sure.
The fact that we've had several months of the same data that they used to cite, or that they cited for rationale for cutting, and now we're not cutting.
Right.
I mean, that confirmed that argument, right?
Yeah,
that said, stock markets near all-time highs, gold's near all-time highs, crypto's near all-time highs. When you have all of these strengths in the economy, jobs, according to government data and even some private sector data, jobs are strong. I say this all the time in the content that I write. Inflation being at 2.8 or 2.6% is not inflation being at 2%. So whether I think the 2% target is arbitrary or not is irrelevant. If you're setting yourself a goal and you're saying we're going to hold rates steady or restrictive until we get this goal, they haven't met it. So like I said, I don't think a Fed rate cut is necessarily warranted right now, but I don't think that they're not cutting because of that. I think that it's far more political right now. That said, this is a long run-on sentence to that.
No, go for it. That's why I bring it on.
I think right now, as we saw when the Fed cut rates right before the election, the inverse happened to mortgage rates. They cut 100 basis points, and we immediately saw mortgage rates increase 100 basis points. So I think if we see a Fed cut, if the Fed cut yesterday, that I am positive, well, I'm 92% certain that we would have saw mortgage rates get worse, right?
Sure.
And the reason for that is that there's a lot of reasons for it, but the reason why I believe interest rates have been stubbornly high as it pertains to mortgages in treasuries is that the government is just printing money and still setting it on fire. So without a plan to rein in government spending, you can't just keep printing money secured by these bonds and expect people to buy the bonds and think that the value is going to stay there forever, right? Like you have to have a way to service the debt and to rein it in. So a lot of variables, but like I said, I would love to see mortgage rates lower. I don't think Fed rate cuts are the way to get there, at least in the near term.
You may or may not remember this, but early, our business. So like this time last year, we were on a tear, and I thought we were going to have a really, really like a record. We had a record breaking year last year, but I thought it was going to be like a really big year. And we got to like this time last year, and I want to say things were still going well, but we started getting into like probably like September. So, a couple months from now last year, and it got really hard. And the winter,
I think it started earlier.
We started having the election. I think we started having the eletion. I think the election objective,
but I think like July, August is when it started to really.
Sure. And then it stayed that way. For us, it stayed that way until, this spring. And I'm not here to brag about our sales statistics because that's not why people come to watch this channel. But we're having, I feel very fortunate in the year we're having, but it has been the hardest year. I mean, the stuff that has happened this year deal wise, and I've been doing this for a very long time. So I'd like to say that the reason a lot of people hire me is because I can know the landmine before we walk across it. And this year there's been landmines that I've never seen before. So again, we're learning a little bit. But I remember I remember talking to you last winter, and in January, the news or whoever was saying that this year is just going to be, this is just going to be a lost year. Like this is just not going to be a good year. Basically written off. And I'm like, man, we're still going to pay our bills this year. So like, what the hell do we do? But they weren't wrong. I don't want to say that this has been a throwaway year. I'm very, very fortunate with the amount of business we've had. I still think there's a good chance the fall is going to be good, but a lot of people are looking ahead to 2026. Something I started to hear today on the news was midterm elections. What's next year like? What's your prediction? Is next year, do we rebound? Is it a slow climb back? What happens in 12 months from today? Not, the last half of this year.
Yeah.
And the first half of next year.
I honestly, so I wish crystal ball was working. It's not.
Yeah, just
I
guess.
honestly,
We're
yeah,
not going to win.
I think from a business standpoint, from a rate standpoint, I think we're going to see business transaction count at least slowly improve. Right.
Mm-hmm.
I would like to think that the lows that we saw earlier this year are well behind us, and we're not going to dip back into that. And I think that that's being driven right now by buyer activity that we're seeing, especially, I know what's going on within my team locally here, but when I look at national reports within our company and activity reports within other lenders, there's definitely, on a national level, there's been a lull in applications. And usually I would like to think that is followed by a pretty solid rebound, because like you said, opening it up, there's just a fair amount of pent up demand.
There has to be.
Fannie Mae just revised their rate survey earlier this week or last week to show rates getting a little bit better before the end of the year. So I think that there's a lot of, there's certainly some headwinds, but I think we've got a lot more tailwinds, and knock on wood, I feel like if using interest rates as just sort of the benchmark for how our business is going to go, which is that's how my business goes, right? If interest rates are good, our business is good. If interest rates are not great, our business is not great. The high watermark for interest rates was like October of 2023. So if I stretch the chart out back to then, October of 23, we've been in a pretty steady downward trend since then. So I've said since the beginning of when rates started really skyrocketing, when it comes down, number one, we don't want it to come down quickly. Right? When rates go from 7 to 4, that's wreaks havoc on every system. Number one, it's hard for mortgage companies to keep up, which means we provide really bad service. It's hard for appraisals. It's hard for title companies. It's hard for buyers. Everything is harder when rates fall that quickly. I would like to see them come down a little faster than they are. Like right now, if I go from January 6th, first business day of this year, to today, we've seen rates improve about 0.3%. So we started about 7 1/8, and right now they're about 6 3/4. So, that's a pretty slow progression. But if you figure we're roughly halfway, 7 months through the year, another 0.3% brings us from 6 3/4, closer to 6 1/4. I'm pretty happy with that. And if we keep on that same trajectory, that would say, mid fives by 12 months from now. I think mid fives is a pretty darn good spot to be in, especially when you've had, the better part of 3 years at close to 7 or above 7. Yeah. So I think that gives us, again, my soapbox. So for mortgage companies, there's two parts of the business, right? We have purchase business, and that's what we rely on. That's our bread and butter. That's what keeps the lights on, because it's historically, that's a little bit more consistent, because people are always going to move. What we see in times like this is that the other half of our business evaporates. We get almost no refinance business. And sort of that's, I used to always joke and say, like, to my loan officers, the refis are kind of like your salary. You're always going to have a couple of them going. There's a reason to do it for most customers at some point in the cycle of when they have their loan. So you'll always have a couple going, and during the booms, you'll have a bunch, but focus on your purchase and you'll always have a couple of refis. Well, we've taken those couple of refis out, so that's made it a lot harder. But get back into that high to mid fives. And I honestly think the market really starts moving a lot, because you see the locked in at 4%, the locked in at 3.5% buyers. That's not as big of a jump to go to 5.5%. So you start seeing some inventory come back. And yeah, so long answer to a short question. I think we steadily see it just gradually get a little bit better and a little bit better, both interest rates and inventory coming to market and home selling.
How much time? What's the life cycle of that?
Like I said, I think if we keep on this about 0.3% every 6 months, that we've been, that's basically been the cycle since October of 23. I think that puts us about a year out from now, and that kind of aligns with all of the analyst forecasts and the talking heads, which, I mean, they don't know anything more than you or I do, but they say it and it sounds nice.
Any advice to a buyer, if you've been looking for a house, and I know a few, I think there's just a ton of people out there that probably, I honestly think that the pent up demand, both on the buyer and seller side, we think it's big. It's probably even bigger than I think it is, or we think it is. Yeah. Any advice for a buyer? Because there's buyers out there that have been trying 3, 4, 5 years to buy a house and just haven't been able to? Is it just give that person, if they're watching, some advice?
Tune out the noise, right?
Yeah.
Turn everything off and have a serious discussion, with your partner or yourself or whatever, and get out your piece of paper or your notepad and write down and I do this every time I talk with a buyer, whether it's first time buyer or somebody that's bought 15 houses. I say, what's your desired monthly payment? And the joke answer there, oh, I want it to be 0. Cool.
Right. Of course. Me too.
But $2,200 a month or $1,500 a month or whatever that number
whatever it is. Right.
And I'll say, cool. That's where you want to be? Is that your ceiling, or do you have a little bit of wiggle room? And from that number, we base their qualification, right? Because a lot of times somebody will say, I don't want my payment to be more than $2,000 a month. They might qualify for a $5,000 a month payment. That doesn't mean they want it. So if I'm able to take that information of what they want and say, all right, well, that $2,000 a month gets you in this market, gets you a purchase price of this. But in this market where taxes are a little bit lower, it gets you a purchase price of this. And I think that's how you and I have found so much success for buyers is that we take the interest rate number out of it. We take the purchase price number out of it, and we just focus on the immediate, which is what is your budget? What does your budget and your personal comfort level allow for? And let's find something that fits into that. So we get so hyper focused on, the rate's 6.5. I needed to be 6.25 to get what I want. Or, the purchase price is 250 and whatever. There's so many different variables that impact the final cost of the home. Ultimately, the number, in my eyes, the number that matters, if I'm going to buy a new car or buy a new house or whatever, I want the price to be low, but ultimately I'm not writing a check for $250,000. I'm writing a check 360 times for $2,000. So I would say focus on the things that are most immediately important, and almost unilaterally, the interest rate is not one of them. It's going to be what the monthly payment ends up being.
Are you seeing certain price points do better than others or be more competitive? Are you seeing anything? Are you seeing any trends across price ranges?
Probably, if I looked hard enough, there's some there, but kind of for better or worse, kind of our sweet spot is where the customers that we work with are pretty much all kind of in that same price range. So you'll get the outlier, huge loan amount or really tiny loan amount. But by and large, most, the joke we have in the office is like, if a house comes in, it used to be if a house came in at $200,000 and we asked around the office, how many people are writing on this? We'd have 15, 20 buyers on the same house. And then it was 250, and then it was 300, and then it was 325. And now what it seems like is that there's definitely more options for those buyers in that 350, 375. It sounds crazy to say this, the affordable, the $400,000 purchases where that used to be huge, right? And now that's just kind of normal. One of the people I had referenced earlier, the camper people, that's kind of the range that they're in, and they have definitely found a lot more options in the last several months, as opposed to what they had been looking, or what they had been up against previously. So
I think if people, again, to your point, block out the noise, I've been telling a lot of my clients this for a long time. This is the best time in a long time to buy a house. And we've had a lot of clients get, a couple things. One, we've had clients get a lot of, it's crazy because it seems like a house is either under contract in the first week or it takes 6 months to sell.
Yeah.
I feel like there's just no in between. So the ones that have that sold quickly, we've had a lot of luck getting our clients offers accepted and saving, $15,000, $20,000, $30,000 under asking, which I think you're going to start to see a lot of that this fall.
Way more of it so far this year, or this part of the second quarter.
I think the fall, there's a lot of listings stacking up on the market. Every day, I should look right now, the price reduction today. Yeah, there was 17 on the MLS today, which is a lot this time of year.
As I think about just the customers that I've got in my personal pipeline, I think every single one of them that's an active, like a in-process transaction with an accepted offer, I think every single one is under contract for less than list price.
Yeah, which is going to be happening, I think. 6 months
ago, that it was probably the opposite, right? It was like every person was over list, or a year ago. So
and I think even like something we don't talk about very much is even the experience when you buy a house. So here's what happens when you buy a house comes on the market, super popular, goes highest and best. They have no time to think about it. They're rushing from wherever they are to get up here. have a family member look at it. They're just, the whole process is a lot more strained. And I think when you get a house, the whole process is a little bit easier when you start talking about buying houses that go for
Yeah.
$20,000 or $30,000 under list price.
What's your take? Like, what are you seeing as far as trends from list to sale? And actually, I've got another question for you too. And after that one.
So what I'm seeing is, in this market, there's still a lot of, I just on the MLS today, I'll just look real quick before I got on here. I looked, there was, on the high end, there was a $6.4 million sale. There's a $4 million sale before off market sale. And then there was a house, another $3 million sale. So the big stuff here is still just going on a tear. I think that $1 million mark here has started to become the entry level for a nice big house. Like if you want a nice big house, you're probably going to spend $1 million. I think as you go down from there, the 400,000 or 500,000, I still think that buyer is affected a lot more by the interest rate than some other buyers. And I do think there's a lack of inventory. I just think the trends I'm seeing is gridlock is the word I would use, because again, there's a lot of demand out there, but there's something going on. I don't know if this is in the world or just in the real estate market. But there is something going on right now where there's a lot of like people getting a house under contract and changing their mind, or like just the stuff that
weird stuff.
I'm not criticizing anybody, or I'm just talking about, just talking out loud about, I don't know if it's, I wish I could almost ask, because they never give you the truth. It'll be a house under contract and then something will happen. And what they tell you is probably not really the truth. I wish I knew what actually happened. Like, did you just go cold feet? Was it? And look, I don't want anybody to buy a house they can't afford or don't want to buy or whatever. That means you have to back out. You have to back out. That's life. But I just wonder what changed between the time that they were, motivated enough to come see houses, put something under contract. It hasn't happened a lot to us, but I've heard of it happening to other people. I just feel like
you see them back on market, right?
Yeah. Like, look, I'm telling my clients now, if you're watching this video and you're thinking about buying a house, don't be afraid to be in the backup position, because I'm telling you, this isn't a statistic that we track, but I think the percentage of listings that sell to the first person that had under contract versus somebody that came after that, I'll bet it's more than 50%. So if
that would be an interesting stat to see.
I don't, there's gotta be a way to, I wonder if there's a way to track it. I should look on the MLS, or maybe there's a, because the stat goes to back on, I don't know. There's probably a way to figure that out, but
sounds like a project for GPT or Candace. Or
both.
There
we go. Candace GPT.
All right. So here's the second question I have for you.
Hit me.
Do you see a disconnect between buyers' expectations or sellers' expectations and buyers?
Oh, absolutely. Yeah, absolutely. I think that's never more evident than when you put out listing on the market and it gets 30 showings and like 2 offers. That means 28 people or whatever the margin is thought that this house was not worth, I think the really hard part, since we're talking about this topic, I think the really hard part is when you get a buyer that keeps looking at houses and doesn't make an offer, but those houses end up selling, because I think that demonstrates the disconnect more than anywhere, because the market is saying this house is worth this. You as the buyer are saying it's not worth that. And I think whether you're a seller or buyer, you have to understand what the market is telling you, right?
Yeah.
I think, look, I'm a real estate agent. I don't love what your money gets you in most situations. I think the houses that are selling, it's hard, because my whole life, the houses that are now selling for $1 million were 400,000,
I mean, if we could go back in time, right?
We should have slept in our cars about all that. Should have bought the biggest house we could afford. Look,
I look at listings on Torch and I'm like I remember when it was like, wow, that house on Torch is listed for $1.5 million or $2 million. That was like a big deal. Now it's like every house is at least $2 million.
There's some people in Petoskey that I know that did this. There's a couple of different couples. I'm not going to say their names, but they're doctors, so they have a big income, and they bought $1 million houses back when those $1 million was a lot for a house. And fast forward, now those houses are worth $3 million, and they hit such home runs on that. So
hindsight's 2020.
Hindsight is 2020, and sometimes your gambles pay off, and sometimes just toughing out. Look, when I bought my house in Petoskey, I wish I would have bought the most expensive house I could buy, because now those are all worth 3 times as much. That's okay. It's just a really interesting time. That's why I wanted to have you on.
I gotta compliment you on that shirt too, by the way. That's a great.
Well, you made it for me. I didn't get a chance to shout it out yet. So if you're a real estate agent, and a lot of real estate agents watch these because they want to do it also, which is perfectly fine. So if you're curious about real, reach out. What's next? What else do we have to talk about?
Oh man. You know what's funny is I will say to the viewers, Gino and I talk on the phone, I would say six or 8 times a day minimum.
Yes.
And we'll have so many times where we're like, God, this should be a podcast, or we should cover this. And it's like, we need to start writing these down, or like create a Slack channel for it. But so I guess I'll go into the buyer seller disconnect. What I think is really interesting right now is, so you're in Petoskey, so 60 miles, I guess, north of me in Traverse City. And I think right now, the story between those two markets could not be any more different. Like, I think that sellers are probably still pretty well in the power position in your market. I think there's a severe lack of inventory, right? I think in Traverse City, it's shifted. And I think in a lot of cases, sellers' expectations might be lofty in comparison to what buyers are willing to pay. And I don't know that causes prices to come down or sellers to lose interest in selling or whatever, but I think that's what we're seeing, especially, like days on market ticking up a little bit. Like I said, active inventory is definitely getting larger. I guess the caveat to that too, though, is that I don't think that's a bad thing, right? Like,
no, I agree.
You would know the stats better on it, but it was like, at one point it was like the average days on market was like 3 or something like that. And it was like, that is the least healthy real estate market you could have, right? Like, I don't know what the best is, but like 30 days is probably not 3, right? Like, buyers should have the chance to like look at a couple of houses, get a feel before it's like gun to your head, write this offer or else, so I think that we're definitely starting to see a little bit of a shift. One of our local appraisers here does this weekly like email newsletter that just very succinct breaks down like number of listings, waterfront, number not waterfront. Here's the value trend for the week. And pretty consistently every single week this month or this year, it's been like buyers are slowly gaining advantage. It's not quite a buyer's market yet, but it's slowly tilting in their favor. And that type of information is helpful because it's data. I guess I love data because there's no opinion to it, right? It's like, it was this, now it's this. And it really helps you spot that kind of stuff.
Yeah, no, I think that's interesting. Also, I think something worth noting is Traverse City, when I did the mid-year report, was the only market that had more units sell this year than the year before at that point. Yeah. And I think it's because you guys, it seems like every realtor over there has a building company. Yeah, it seems like every realtor over there has a building company. And do you think it's just because there's so much more inventory being built in Traverse City? Because there's subdivisions everywhere.
You know what? I'll tell you what. Yeah,
that sounded really funny.
So there are a couple of realtors that are also developers that honestly stepped up and are doing some pretty amazing stuff, right? So you constantly hear the argument, there's no affordable housing. Somebody needs to build affordable housing. And there's a couple in TC that were like, all right, we're going to build affordable housing. And I'll tell you what, they are selling those units. They are moving them. I did a deep dive on one 2 days ago for a loan officer on our team. In fact, I'll shout it out. Thrive in Traverse City, which they tout themselves. Josh Hazelton is the broker there and the developer. They tout themselves as the most affordable new construction in Traverse City, and they are. I think
that's great.
I pulled all of the new listing or all of the active listings and the closed sales and stuff. I think it's a 28 unit. They're basically like townhomes. So it's like you share a wall. It's a condo, but you share a wall with one person and you own the left side and somebody else owns the right side, kind of a deal. They're, $275 to $315 or something like that price point for, like I said, brand new construction. You've got little like garage carport things and stuff, but they seem to be selling these things as quickly as they can get them on the market. So there's definitely a demand there, and kudos to those guys. Cause
absolutely,
like I said, there's been like years of people begging for that type of thing. And none of the traditional established builders, we'd rather build $1 million, $2 million, $3 million houses. And finally some guys came in and were like, well, let's try it. And sure enough, it seems to be working.
No, I think there's a lot of demand for that. That is something that we're seeing in the house. We just put one under contract today. That was very, very new construction. People want new. When I was a kid, when I was a kid in starting to sell real estate, it seemed like everybody wanted the fixer upper, the house they can put some elbow grease in. Now, I don't know if it's because we're all busy or what the story is, but it seems like everybody now wants move-in condition ready houses, and those are the houses that are selling at a premium.
So I got a wild thing happening right now. So I'm like
right.
sitting in my backyard. I don't know if you guys will be able to see this, but
Let's look.
there's a deer walking through. Oh, he just bolted.
Are you on your phone or computer? What are you on? Your iPad?
It's I'm on my computer, but it's my GoPro is the camera I'm using.
Oh, that's interesting. Is it work? Do you like it?
I think it's good. Do you like it?
Yeah, I think it's working well.
My lighting is a little off. I'm kind of dark in the face here, but I didn't brush my hair, so I figured I better wear a hat.
Yeah. That's lighting hard outside. That's something we do all the time.
But yeah, like I don't know, it kind of freaked me out when I look over and I'm like, whoa, there's a deer 30 feet from me, but it's living in the woods.
That's Northern Michigan for you.
Yeah, right. That's why we moved here. Like, it happened. Ironically, our neighbors have a feeder at the top of this hill, right? So every single night, the deer walk through the backyard and we watch them.
Can you hunt out there or no? Can you hunt in the subdivision?
No, the neighbors might get pissed. Although I'll say, if you drive, so like I live in Holiday Hills, which is like a
nice
big
subdivision.
Well, we love it, right? We lived here for 13 years, but Mount Holiday. So Holiday Hills is a neighborhood with Mount Holiday, which is like a local ski resort. I don't know, probably 6 runs or something like that. Nice little ski hill. So if you drive up Holiday Road to the end, it turns into a dirt road, and there's like 2 tracks. Which, if you're not from Northern Michigan or if you don't know what a 2-track is, it's just like these trails or dirt roads that wind through the woods, and it's fantastic. So anyway, if you drive up Holiday Road into the 2 tracks, there's this section called the 80s, and it's 80 acres of state land or county land. I don't know, some government entity owns this land, and you can shoot guns there. So like we will often be sitting.
Is that right?
Here,
I didn't know that.
Yeah, you'll hear people just shooting out there, and it's like when you go back there, there's like target ranges set up. It's actually pretty neat.
That's actually kind of cool.
Yeah.
Do people hate it? Like your neighbors hate it?
No, no. I think our neighbors embrace it pretty firmly.
What are you thinking about as a mortgage leader? You know, you lead a team, you're part of, you have a lot of influence at your company. What do you think about in terms of your business right now? It could be big, small. Like when you're just in the car, when you're in the Mercedes driving around, your mind wanders.
Golly, I wish I was still in the Mercedes driving around. That baby's been in the shop for 8 weeks. All right, I saw her today though. I rubbed the fender, gave her some.
How's it going? Is it going to be back soon?
Again, knock on wood.
All right.
Yeah,
let's hope
we've got it diagnosed. We think we're on the right path with it.
Well, that's a good thing.
Yeah. So what keeps me up at night or what not keeps me up at night?
What do you think
about?
Yeah.
You know what? I think the market, the job, yours and mine, has changed so much since the pandemic, right? Like technology plays such a strong role in what we do, but it also made us a lot lazier and a lot less personable. And it just, I don't know, it shifted a lot of how we operate. Mm-hmm. And I was on a call, actually our CEO said this, and it really resonated with me. So this is what I've been thinking a lot about the last couple of weeks. And that is that there is no replacement for that human contact, right? Or that human connection. So AI can calculate all the numbers you want and give you all of the facts and data you want. But there's no replacement for somebody saying, here's what the numbers are, and let me explain to you what they mean, right? So like, my focus for the last bunch of weeks has just been on encouraging my team to just get back in the market and make those connections with our referral partners, our realtors, but also our customers, because ultimately our job is not just to sling paper, to throw out, checks so people can buy a house. It's to provide financing in the community that's affordable and that's responsible. So I don't ever want somebody to buy a house that they regret and can't afford down the road. So there's so many parts of what we do that like taxes in Michigan are a huge thing, right? Especially now as we've seen values go up, the property tax discussion is at the forefront of every discussion. So it's like we as loan officers, we can do our job and I can crank out a pre-approval in 10 minutes and send it on its way. But should I need to spend, let the customer know, hey, let's slate 35, 40 minutes where we can actually talk about what these numbers are, dial in and look at what we're doing. And what we've seen as a result of spending the extra time and doing the explanations and just educating people is people feel a lot more confident. when they feel confident, they're much more apt to make that decision.
No, for
Whereas
sure.
if we're just shooting the numbers over and here you go, drinking from a fire hose, it's a lot less fun way to do business, but it's also it's not as effective. So for us, it's just been kind of really going back to basics and being like, let's actually be the servants to the community, or however you want to put it, that we should be. And that's
awesome.
Dude, there's like a crow right there.
I can hear it.
Just flew over. What are your? I know all of yours because we talk.
I tell you, no, it's just how to look. This is we've both been in this business for a long time, but we're both compared to the industry, both very young, and we can't have two things. Selfishly, it's how to navigate, how to make the most out of a tough year. I can't, I'm not just going to lay down and say this year is terrible and life goes, and it's not terrible, but also how to guide. I feel like our clients are, sometimes drowning in a pool, and it's our job to pull them out. And I think it's just how to make sure that I'm in the right mental state every day, or the right physical state to guide.
It's tough,
people.
right?
It is tough because
we're constantly barraged with negativity.
Right.
Like whether it's on the news or
it feels like there's the negativity on the news, and there's also the negativity and sometimes the situations you have to deal with. And it's just trying to guide people through the decision-making process. I'm working on a deal right now where it's going to go highest and best. And I told the person, look, you can either raise your offer, or if you don't want to raise your offer, go back a position, and there's a good chance you're going to get it that way. So just really trying to give people the best advice possible, because I think, there you go, Laura, shout out to Laura.
Just notice that one.
It's just trying to guide people. Cause I think as the market, for those of us that are good at what we do, I think the market getting tougher allows us to show our value differently than when the market isn't, because I think anybody can do it when the market's easy. So it's really how to make sure that I'm an asset to the client, meaning I can look, and sometimes, and I hate to say it this way, but I had a conversation with a seller today that, I don't know how to say this I'll just say it, was probably making a short-sighted decision that was going to affect them negatively in the long term, and just having the confidence or the authority to say, hey, like, maybe you might want to look. I don't care what you do. I almost always start every conversation with, I don't care what you do. You're the boss, but you might want to look at this differently.
Yeah.
And I think
it's almost like saving people from themselves.
Yeah,
right?
100%. I think sometimes it's having the confidence to just say it. I think there's a lot of people that won't stand up and say what their truth is, and because they're afraid of rejection or afraid of whatever. And so what I think about is just making sure I'm able to have the tough conversations regardless of what is happening, what's not happening, having to tell, what, and I don't know. I don't want this. I feel like we've been talking for 50 minutes. The market's just a little bit tougher. There's still people buying and selling houses. I don't want it to sound like doom and gloom, because I'm still positive. I think this fall is going to be great. It's just been challenging this year. And I do think part of what I do on this channel is give people the honest truth, and it's a pretty honest conversation.
And the reality too is that it's been a hard year for sure. That doesn't mean that we're not getting stuff done. It's meaning
we're statistically we're having a good year
to get them done, but
yeah, for sure. Statistically we're having a good year.
Yeah, it's just a lot more goes into it. Again, I reference a lot, the joke around the office, because I personally don't produce a lot myself, but I manage a team that produces quite a bit. So I'm involved in a lot of transactions that way. And, kind of the joke around in the office is that, like, we don't have normal deals right now. Very few.
We don't.
There's never I've got an 850 credit score and 50% down, and here's the purchase agreement. Let's go. It's always like, oh yeah, I've got a great down payment, but there's some weird thing going on. There's always there's a little bit of hair on everything. And sometimes it could be, you get worn down a little bit, but then you're like, wait, like, I get to live this amazing life. Like, if I have to work a little bit harder to make that happen, like that,
no, we're still lucky.
Yeah. Like the market's going to be what it's going to be, but you could throw your hands up and be like, it's not for me, but we're still here. Like we're making it work for sure. And it's, if nothing else, I would like to think in a year or two or 6 months or whenever, we're going to look back and be like, man, 2025 was a great year. I learned so much,
100%.
right? Like
There are people that say there's a big, I don't know who it was. Some big realtor was saying that these were this year, last year would be the 2 hardest years of our career. And I hope so. That means because that means they're not going to get harder, but
right.
Also,
I think something we talk about a lot is our job being hard is a reflection of it being hard for our customers. So it's like we shoulder a lot of their frustration or whatever. So it's like that person where you're like, you've got to make the call, like, oh, sorry, we lost out, or whatever. But
right.
To your point earlier, like if you're in that second position moves to first more often than not right now, right?
Absolutely.
So you find the gold in the hills, and it's a tricky market, but I think you hit the nail on the head. Like you got to work with the right people, and hopefully that's us. But if not, there's tons of great loan officers.
No, we're not the only good realtors and lenders in the world. Just might be the most fun.
I'd like to do so.
I'm gonna let you go here in a minute. What are you gonna do after this? What's on your plan for
Kate and I? So Kate and I are heading to Silver Lake Sand Dunes tomorrow. So this will be her first trip. We're going camping for 5 days. So after this, I will be ripping the carpet out of the Jeep, loading up all of our camping gear, and getting her situated for a good 5-day trip.
Should have borrowed the 4-wheeler. You could went ripping.
Don't plant that. The last thing my 9-year-old maniac daughter needs is to think that she can. Yeah.
No, that's
what about you? What's your
I don't know. So last night I try to, I don't know if it's a midlife crisis, but just staying active has been super important to me. So if you watch this channel for any period of time, I'm a pretty big CrossFitter. I'm not that I'm great at it, but I love to do it. I have a road bike that I love to ride. So if you follow me on social media, I posted a reel last night. If you like to ride bikes and you're in Northern Michigan, you've got to check out the Little Traverse Wheelway between. So I've taken it to Petoskey to Harbor Springs with Jeannie, and then we went Petoskey. I went last night by myself. I went Petoskey to Charlevoix, and it's just incredible the view you get along the way. But I'm going somewhere with this story. So I did that. I did like a 30-mile bike ride last night, and then today I got up and my schedule was busy, and I wasn't going to be able to go to CrossFit. So I thought, rest day, call it good. Well, then something moved, or somebody moved it. I don't know what happened to my calendar, but I was long story short, I was able to go to CrossFit. So I went, and now I've got this like crazy headache, and I think it's because I'm dehydrated. So I drank 2 bottles of Gatorade before we hopped on here tonight. So I don't know. I might just go chill. I might go.
Are you tap dancing right now? Like, okay, I got to get to the bathroom, or you're good?
No, not yet. I'm about to though. Might go get some ice cream. Might go get some pizza. Might make some. I don't know, something nice. Fun. It's nice. It's so hard, and I don't know if this happens to you because I could feel summer. It's August 1st tomorrow. I can feel it fading, and like I just feel like I need to make the most out of it. Meaning, every second that it's not. And we've had a great summer. June was tough, but we had a great summer weather-wise, which you can probably tell I'm a little more tan than last time you saw me.
Same.
But it's just, you got to make the most of it because kids are going to be back at school. You and I talk about this a lot. We're both at the age where, as hard as it is to talk about, we're down to like single digit summers with our kids. So it's just trying to make the most of it. I don't know, just doing our best. We
have, like I said, I'm sitting in my backyard here. Like we have gone out of our way to move our lifestyle outside, right? So like we've got the TV outside and stuff. It's like you can't disconnect, right? Like a 9 and a 12-year-old, we're always going to have a screen somewhere, but we can be outside doing it. And this has been, to your point, like it hasn't been sweltering hot. We've had a couple of those hot weeks, but like this has been an awesome summer for it really has outside weather.
We had a couple Saturdays. I don't know if it rained there. We had a couple Saturdays where it rained here.
Yeah,
but I'm gonna respond to this comment real quick. Johnny Bull rode Petoskey to Charlevoix last Monday. Petoskey to Harbor Springs. Yeah, I love it. I think if you like to ride bikes, that is a great trip. Thanks, Johnny, for watching and commenting on that. No, I think that it's tough because you want to be busy. You want to. I think managing, at both of our stage in life, just managing our lives during the summers a little bit. We each have our own personal, professional challenges. Yeah. There's just so much to do in Northern Michigan that, I've got videos of Jeannie riding the 4-wheeler. I've got videos of Jeannie swimming at the beach, riding his bike. There's just, especially for kids. I mean, there's just what I like about Northern Michigan is it's a lot easier to be active here. And I think as you get older,
Yes.
being active is super important. I was at CrossFit today and I was talking to a girl there that I know, and I said, I feel like it's sad to say, and it's probably a little bit dramatic, but I feel like at this age, I'm just being active to outrun father time. And I've got a couple friends there. I always like to have friends that are older than me. So there's a guy there. I don't think he's watching. His name is George.
Is that why you hang out with me?
Yeah, basically. So the guy, his name's George. He's quite a bit older. Not quite a bit. He's probably 20 years older than I am. And he's there and he's like, we're doing this now so that when we're 70, 80, we can still get around. And that is not lost on me. I'm not sure that I'll ever be in like crazy, like incredible shape, but if I'm able to play with, my grandkids, hopefully one day, then that's worth going across it 5 days a week.
Yeah. So my dad is 65 and he still wakeboards probably 2-3 times a week.
Honestly,
water skis. Like,
you ask me,
that's my plan.
If you put that on a chart, there's this book called Freakonomics that I read a long time ago. That was like however much money makes it was like a money equation between like a guy having this much money and like being this attractive. And I think if you put money versus being active, like when you're 65, there are people that have a lot of money that are not able to do what your dad's able to do. And I think they would pay a lot.
Didn't have any money at all. So
what I'm saying is I think the people that had a lot of money that can't do what your dad can do.
Yeah.
I think they'd pay a lot of money to be able to do that. So
100%.
Health is wealth. And I think I don't know. I don't want to work my whole life and hopefully build something big and then not be healthy. So that's my soapbox for the night. Make sure you take care of yourself and do it in Northern Michigan because I can't even tell you, there's pickleball, there's paddle boarding, there's kayaking, there's whatever you want. Walking in your neighborhood, it's just so easy to be active here. It's
funny you say walking in the neighborhood because look,
walking in the neighborhood's 80% as good as going to CrossFit and losing your mind every day.
Well, and like our neighborhood is crazy hills and stuff.
You have a good neighborhood.
So I think there's 4 new families on our street, which like we probably haven't had 4 new families in the last 5 years. And now in the last like 3 months, 4 new families. And one of the things, so my daughter, if I've got time for a quick story. So my daughter,
all night.
My daughter had this, she made a carnival in our front yard with like, balloon pop and all these games. Cause all these new neighbors have littler kids, like 3, 4, 5-year-olds and stuff. My daughter's 9. And we're kind of dreading it before it happens. We're like, oh my God, this is going to be so weird. Like none of these people have any interest in this little girl's carnival, but they're going to come to be polite. And it turned out being the greatest thing. It was like all of the new neighbors came and we got to meet them all. And they're like, thank you so much. So it ended up being kind of like this little neighborhood gathering. And sort of the center of conversation was, the reason we love this neighborhood is because every time we came and looked at the house that we ended up buying, there were people out walking and there was people doing stuff outside. And it's like, truth told, like that's when Laura and I, we bought this house in December, but we first looked at it in July because it was a different market. Houses be on the market that long back then.
Right.
And, we were fortunate enough that it was still on the market when we were ready to buy. And it was like, same thing. It was like people always outside doing stuff and neighbors, helping each other out. And it's cool. I love, like, every time I go back downstate, I'm reminded of how much I love Northern Michigan and how I couldn't live anywhere else. Like I'm like the biggest walking commercial for it because like we really do get to have, stresses aside, like everywhere you live or every job you have is going to be stressful at some point, but like every single day I drive past Lake Michigan, I have the most beautiful drive on my way to work. Like it's the stuff that you get used to where you're like, God, I really take this for granted, but you give yourself that reality check and it's just like, man, we are pretty fortunate.
No, absolutely. And I think, it's funny though. It's like the wealthier the neighborhood, the more people that are running. Like when you go to Harbor Springs or Bay Harbor, there's always people. I mean, I don't know if it's a safety thing or whatever, but when you're in Bay Harbor, I was in Harbor Springs yesterday for a while. People are just always running. And I'll tell you. So I was in Harbor Springs yesterday, Bay Harbor. I was in the Mullet Lake Village today. This is the time of year where these are like storybook areas, like Harbor Springs in the summertime with if you've never been to Harbor Springs or if you're visiting here, make sure you go through what's called Weequatonksing. It's the road that runs along the water where they have the big Victorian houses that have been in the same family for 1,000 years. And then they've got like the cool boat in the water. And then you go downtown and there's people eating ice cream and it's packed. This Northern Michigan is just such a special place this time of year, which is why so many people choose to be here. It's just absolutely incredible. But I'm looking forward to, The fall, I think, is underrated. I think it's a little bit tougher for those of us
For
that have
sure.
kids because they go back to school and that makes their schedules a little bit trickier. But I think the fall's a great time of year. You know, the first half of winter is a lot of fun. The holidays and then like the month, like January is fun because, you know,
Yeah, that February, March, April stretch where you were like, okay, enough snow.
Yeah, tough. So, all right, we just crossed an hour, Ian. I've kept you long enough. We try to have you on at least a couple times a year because you're the Johnny Bull said, "Hey, the Lions game starting." I forgot about that. That's what I'm gonna do today. I'm gonna watch the Lions game. Hey Johnny, leave me a message. What channel is it on? So, all right, Ian. Thank you so much as always.
Thank you,
and we will see you next time. So that's Ian Ashton. A lot of great lenders in Northern Michigan. Ian's my favorite. There's plenty good. The same way there's plenty good realtors. I'm not the only realtor Ian works with, I don't think. So plenty of good realtors out there. Again, the market is there's still a ton of opportunity out there. You know, sellers are still getting a lot higher prices than they used to. Buyers are still getting deals. If there's anything I can do to help you, whether you're watching this live or on the replay, as always, drop a comment, let me know, and I will see you on the next one.